Hi, this is Shane with the Rational Trader. It is Tuesday the 14th, and we're looking at the ES here. Now, I went live with this volume profile, low volume node location criteria this week in the NASDAQ, and now I'm starting to work with the ES to see sort of what the optimal parameters are. So I've got a model here I built for machine learning that uses a 3-tick range bar. And then what we're doing is we're looking at kind of where price is, and then making predictions based on. Should I turn on the music here? And then making predictions based on where that location is. So the key criteria here is the volume profile has been building all night, and this blue line represents the point of control. So the price around which most trading has occurred. So we want to stay away from that price. We don't want to enter there. That makes a good target, but it's not a place we want to enter. We want to be far away from it. And the place we want to be is, we want to look at the high volume. At the high value area. So the edge of the value area, or down here at the low value area. So these represent, the way this works is 70% of the trading for the day up to this point in time has occurred between these two prices. So this represents where the bulk of the trading has occurred. And what we want to do is we want to look at places where there hasn't been much trading. All right, and we want to look at these edges, at the edges of the value area. This is ES. It's in SIM. All right, and so what I've done here is you see the bar gets colored orange if I'm going to make a machine learning prediction at that location. All right, and so these lines here represent low volume nodes. You can see there's a dash yellow line there as well. So this red, I guess it's kind of red, and then the orange line. The reason they're different colors is that in terms of the system, I only care about the two. Is the current bar close to a low volume node or not? And so I look for the closest one above and the closest one below the current price. And you can see what happens right here, of course, is that price crosses that low volume node. And so it changes from being the low volume node is below price to the low volume node being above price. In any case, if I'm inside the value area like I am here, I'll only take a trade. I'll only make a prediction if I'm at a low volume node and far enough away from the point of control. So if I'm too close to the point of control, then I won't do it. I want to get to at least first target. So I need to be 8 ticks away from the point of control. Okay, so with that in mind, you can see that when I look at this, the market opens here. We actually don't start trading until 6:45 today, but nonetheless, you can see I like, just in generally speaking, I like this area. I'm at the edge. I'm far from the point of control. The market has to make a decision here. Is it going to go back to the point of control like you see it did, or is it going to break out into like price discovery mode? Okay, so this is the basic theory behind what we're doing now. Is we're taking the machine learning work we've done for the last like 4 or 5 months now, and now we're applying it more strategically, or we're getting choosier on where we make those predictions. Okay, and part of what we're doing here is helping to. There's a lot of noise in the market data, so we're trying to help separate the signal from the noise. And we're looking for patterns of order flow data, but those patterns recur a lot in a lot of different places. They look the same in a lot of different places, and so what we're trying to do here is apply them more intelligently. All right, so to do that, we want to be away from where much of the trading has occurred. Okay, and then if we break out of the value area, there's some other rules that get applied. We'll talk about that in a little while here. So as it stands, you can see this. I like this location. Either give me a prediction here, either to go head back or to head lower. As it happens, I'm not making predictions yet because the market's just opening. So we actually didn't start today till 6:45, which is right about here. Now you can see what happens is as the market traded through here, enough trading occurred that it brought the point of control from up here down to here. So now this is the dead zone. We don't want to enter here. There is a low volume node right nearby, so the market came down to here. Didn't spend very much time here, though it kind of looks like it did, right? It looks like you rotated it around, and it stayed low, so not a lot of trading actually occurred. This is what makes it interesting using this as opposed to just looking at the price action. Because the price action here, this looks to me like you're just rotating around this area. You'd want to stay away from it. But actually, not a lot of trading has occurred. That's why there's a low volume node there. In any case, it's now too close to the point of control. So you can see here that all these bars stop going orange because we don't want to enter here. Market falls down to here again. I like what I see. This is where I want to be making predictions. Is there a pattern of order flow in there that I recognize, or rather that the machine learning system recognizes as going up or going down? I won't explain the yellow and gray bars. Those are for debugging, but we can talk about those some of the time. At this point here, we exit the value area. Okay. And so we start to get a little more strict about what to do when we get out of the value area. We're very far from the point of control now, so this is no longer an issue. We can't use it as a way to help us stay out of trouble. And so we implement what's called wave-based chop avoidance. That's what these stripes are. So the stripes are saying the market's going sideways. It's been going sideways. Be careful, basically. And then it actually that occurs for just one bar actually before the market has broken out enough that we don't care anymore, and we'll take a trade. There is a low volume node that forms very briefly right there, and so that's why that bar is orange. That would be a beautiful place to get in. So we'll make predictions there. If we see something, then we would get in. Again, I kind of like what I'm seeing. All right, so either I'm going to predict there. Looking to get short, right, on the break lower. As a human, I'm looking to get short. As the machine's going to see what the patterns show and just do whatever it shows. Sometimes it's what we expect. Other times it'll say, no, that break's going to fail, get long. In any case, no trades yet. We bounce back to the point of control. And then up here, we get the first trade of the day as we approach the high value area, right, the value area high. And so we get a signal to get long here, and then also here actually in the next bar. So there's another one right there. So there's a cluster there that say, hey, get long, but we're actually keying off this first one, this 122. This is a down bar actually, and so we wait for the next up bar and then place an order. 2 contracts, 4 tick stop, and the trade management is get 4 ticks, move to entry -2, and then get 8 ticks, move to entry +1, and take 1 off. All right, so that's what happens here. So that's 2 points, and then the market continues to climb for us nicely, and then we exit there with an 8 tick trail. So that actually turns out to be a pretty nice exit. So that's 2 points. That's 5 1/4. Market goes sideways from here again. Whoops, pressed the wrong button there. I like this location. You can see what's happening. Right, there's two. I see as a human, I see 2 things here. One is there's a pullback to an obvious level. All right, that's there's a low volume node. It's the edge of the value area. I also see this. This is a strong move and a pullback, and then what looks like failure, and you break lower. So we call that a 2-stage pullback, or basically the people that get excited about getting, having chased the move, they end up with their stops down here, and there's like a stop run, and then the market goes higher. So I like that in terms of, okay, this is where I want to be looking to make predictions and see what the machine tells me to do. We keep bouncing around there. This, you can see where this levels, the red line there represents the low volume node that's sitting there, and we keep popping against it and bouncing up. So typically what happens here is that we get to the edge. This is also the edge of the value area. So either we're going to do what you see here, which is pop back up, or we're going to travel back down to the point of control. So it's a good location to be making predictions. Machine says do nothing, do nothing, do nothing, do nothing. We start to get some signals here to short. Okay, we don't get filled. So the order gets placed for right there after this bar closes down. But if we don't get filled within 2 bars, we pull the order. So had we gotten filled there, we would have gotten just an entry -2 and then taken a small loss. Now enough trading has occurred up here that you can see the point of control has moved up, and so the dynamic changes now. Now, as we move further in time here, you're going to start seeing the actual profile here from the end of the day. Try not to let it confuse you too much. You got to stay focused on high value area, point of control. All right. This purple bar here is the ending point of control for the day. So at this point in time, we don't know that yet, right? So again, travel back up to the value area high, and now look to do something, right? Either break out or get short. We get a signal to short right here. We get filled there, and then make 2 points here. Okay, that's a great exit just in front of the point of control. The system does. Let's see. I believe it does an add. Where is the add? Yeah, right down here. So then what happens is as the market breaks lower here, as it breaks this level, the system automatically does an add right there. But we don't get any continuation. So we end up scratching on the add. So minus 1.75 on the add, plus 1.75 on that second contract. So this made 2 points. And that's it, just those 2 trades. Index closes right there. In fact, this trade happened at 12:35-ish, so that's 5 minutes before I would stop. I stop at 12:40, 20 minutes before the close. So 9.25 in sim on the ES, using this kind of first set of experimental parameters to see sort of how it behaves with this approach. All right. 2 trades, so not bad. One of the things we're trying to do is reduce the number of trades that you take, and the theoretical data shows that this approach is equally profitable on half the trades. So we'll see if that pans out. The problem with trading is that the past does not necessarily represent the future, so it's as much about being controlled with your execution as it is about the trades themselves. Let's look at the NASDAQ. The NASDAQ here was painful because of some volatility here. Just very briefly, let's look at this is the average daily range, and it's still very high. It's right here. This is about 80 points. Yeah. So about 80 points. If it's over 100, we consider it very volatile, so volatile that we kind of switch to a different model. It's still pretty high if you just look historically. You get these peaks, but for the most part, you're down in the 50s and 60s ranges. You get these crazy, insane times here, and then it comes back to kind of normal. These tend to be fun, and then it goes back to normal. We've had a really long stretch of very high volatility since the beginning of February. So one of the things we talk about with the members is the increase in volatility. Newer traders in particular tend to see that as, here's an opportunity for me to make a lot of money. And the problem is that an increase in volatility is really an increase in unpredictability. And so it's much more difficult, actually, to trade this. And so one of the things I'm struggling with as someone who's applying machine learning to trading is understanding how much of how much of a backtest result that I do here is a result of good machine learning system design versus it's just random, because there's a lot more randomness in the market. Not a good answer there yet. So I had one of my members asking me, well, so what's my confidence level? And my response was, well, when the market is not super crazy, my confidence level is really high. I've got a lot of data that supports that. But when it's like this, not so much. And I'm going to show you exactly how that manifests itself. So here's the NASDAQ, same day today, which took a max loss today. So for me on a $10,000 account, a max loss is $300. Let's bring that up. Where is it? Right there, minus 310. Okay, and let's take a look at it, and you'll see what I mean about how the just kind of the randomness of the volatility will get you. So it's the same approach. All right, so the index open is here. All right, you can see you get the point of control here, and which we're staying away from, and then the value area low is here. All right, so the bars are going orange, and we're looking for trades, and then we get a nice short signal right here, actually, and I get short right there and get stopped right there. So stop is basically too tight by 3 or 4 ticks before this nice fall down. All right, so this is really painful, and you can draw a direct correlation between the number of times this happens to you and the greater volatility. All right, so the higher the range, the more volatility exists in the market. You don't need to look at things like the VIX or this or that. Just look at the range of the market. If the range is high, this is an average daily range of with a 10-period average, 10-period moving average. And so the stop's too tight for this case. This is would be a nicely profitable trade if I was able to stay in it. And then what happens later? Let's see. Let's walk through it the same way. So here we're outside. The value area low is here. Okay, so now we don't have a point of control. We don't have areas of great volume where we can look and go, okay, stay away from there. Everything is low volume down here. And so we actually need enough trading to occur to give us a low volume node. That's what this is. So this means that we overnight we had traded in this area, since we already have a low volume node here. But as we get further out, you can see all of this down here. We're making new lows. You don't have concentrations of volume that you can use to tell, oh yeah, this is a place where people are interested in trading or they're not. So we have to wait for that to develop, and that happens right there. But the point is that we need another way to stay out of this chop that you see right here. Do you see this? And that's what the striping is that you see. So the wave delta chop avoidance that we used previously, just as the only mechanism we had to avoid choppy sideways markets, we now apply only when we're outside the value area. And so that's what this is saying here. As soon as you set that point right there, okay, don't get long till that clears, and you can kind of see why this happens. All right, and then as soon as you set that point there, here's the first low point. Now it's okay. You're sideways to the short side. Don't get short either. That's why it's purple, because red and blue are on top of each other. So this is keeping us out of trouble. Okay. You could argue that it's also keeping us from that break, but that's kind of a different philosophical debate. Low volume nodes form there, and you got to like what you see here in terms of, let me get rid of this, in terms of the location to be looking to do something. All right. So the market fell hard. It pulled back to, this happens to be the previous low of day. It's not an accident that there's a low volume node right there. Enough trading occurred that you have to have enough trading below the area and enough trading above the area in order to say, yeah, okay, this is a low volume node. There's another one up here actually. This line really right here, this area. Okay, so this is the place to be looking, because either if you look at it with just your sort of normal view, you can see that's a pullback to the break level, right? And so just the mechanics of how the volume trades helps identify places that are interesting to look to see what to do. As it happens, I don't get any the order flow in here is inconclusive. I don't get any predictions from the machine that say get long or get short. It's a beautiful looking short actually, right? You fell hard, you pull back to the break level. This to me looks like you're rolling over. So that especially, here we go, but it's not the case, right? So it doesn't fool the machine, but then also conversely, I don't get a long signal either, which is really what I want, but not this time. Nonetheless, I'm looking in the right spot. I'm not looking in crazy places to find trades. We get up to the value area high, low again. It also happens to be the overnight low, and again, orange bars, start looking for trades. As it happens, we go sideways, and in fact, enough trading occurs that the point of control moves down to here. So the most trading has now occurred right at this level. So we stay out of trouble then. We pop up enough and get near a low volume node that we could take a short here because we're far enough away from the point of control to get to first target. So that's why you're near a low volume node, you're inside the low volume area, but you're far enough away from the point of control that you could do something, either to move back to the point of control and then lower, right, or to continue higher up to the value area high, which is actually what happens. So, but again, to the machine learning system, the order flow in there is inconclusive. It can't tell, right? So do nothing. We get a short signal there. Curiously, it's in that category of too aggressive, so we don't do anything with it. What we wanted was a long, especially right. Let's see, there would have been nice. And actually, the real opportunity for the long is right on that bar. I can tell. I know just from experience now, the machine learning system is looking really hard at that bar because of that. There's a little 3-bar reversal right there, and then a little pullback and an up bar. But as it happens, there's no signal there. We go all the way up to the value area high. This is an area. This is a case here where we can get into some trouble, though it doesn't happen here. When the price advances like this, and the value area edge moves right along with it, then we just stay orange the entire way, and I feel like we're a lot less choosy now. So I'm thinking about whether that's a real problem or not, and if so, what to do about it. Because you're at the edge of the value area, you're willing to. I'm making predictions, and but when price is perfectly in tandem with the value area edge, then that can be a problem. Now, if we're long here, we don't care, right? We're real happy. But if the system is keeps trying to get short, then we're not too happy with that. So something to think. I've seen it a couple times now. A nice short here, actually, 296 is in the too aggressive category. The market goes sideways here. But again, I like where I'm looking here. I like where I'm looking. This one is a little questionable. The reason, just as a human looking at it, the reason that it's okay, right, is that look where you're at. You're pulling down a support, which happens to be a low volume node. So without even having to look at peaks and valleys and wave levels, just by looking at where the volume is traded, we can see this is a place to look. I like a long right there off of that bar. That would be a traditional reactional trader long. The machine doesn't see it though, so no trade there. And then this is where I take a couple more losses here. Let's see what happens. Value area high, and then pull back to it, and then try to short. That's a nice looking trade, actually. You broke above that, pulled really back deep, and then advanced again. So that's actually a nice looking trade. And you try again here, I think. No, this is a long. Here, it's kind of right. The volatility is pretty high, though. So we end up getting it in right there. Market pops down here look how volatile it is. In just a few seconds you go from that's a 20 tick move in a few seconds. So we got just whacked immediately, and then it pops higher. So at this point I'm done for the day. Let's see what else showed up here. Edge entry here where we won't take a trade because the market's falling. There's a long there we'd get in and make 5 points on. That's a short. We'd lose there. You can see there's a whole ton of shorts up here. This is that problem I mentioned where they're right at the edge of the value area, and it's climbing along with price. And so all of these are in the too aggressive category, 287s. We wouldn't take those trades. But this 201 I'd take. You see the red arrow there? I'd take that 201 and take a loss. It's the one up there you want, right? You take that trade, and then you're going to catch this move down here. At that point, 1224, so that's still takeable. But to get to it, you got to go through a lot of noise, and so that noise is a problem. So anyway, for today then, NASDAQ not too great. The ES in Sim I actually really liked, just in terms of how few trades there were and where they were at. I thought they were smart trades. I would have liked to have seen something down here. It just doesn't quite work. There's not. What ends up happening down here is there's too many arrows. Let's take a quick look at it. We really need more orange bars down here to find this bottom, and you're not going to get them because the low volume node doesn't stay a low volume node for very long. You can see it's just for that bar, and then enough trading has occurred that it's no longer a low volume node. So I don't know exactly what the profile looked like at that moment in time, but you can go back and look at it in replay. And then here you're at the point of control, so you don't know what's going to happen. It might look obvious now because you know what happened, but the reality is this is an area of big resistance right here. And a pretty messy, choppy, ugly, nasty-looking place to be, just in general. So I like not doing anything there. We get up to the edge though, and that's where we get in. So okay, that looks smart to me. Make the prediction up here. Either move back down to the POC, or break out into price discovery. So I like what I see there. We'll have to continue to test this. I didn't have the opportunity to do lots of ES back testing, so we're just kind of doing it live here to get a sense for how well it performs before we invest time and effort in the back testing.